Good morning, folks. This is a very quick video update for members, just off the cuff really. I'm going to have a look at some of the things that we're in and just update you. It's a little bit easier to watch a video, I guess. Some of you don't like watching videos, I noticed, but that's okay. So let's have a look at natural gas. We're just holding above the support here yesterday. We've formed, this is the fourth 4-hour candle at that support level. You'll have seen my updates on this. It's a pretty key support level, this, and we've got several support levels down below us at 245 to 250, 225 to 230, and then 215 way down here. But I don't think we're looking at those right now. We've got the 200 period moving average just below us at around the 247 level. But have a look at these patterns to the left of us where we've seen these sort of bearish candles, 3 bearish candles leveling out, a little spike, and then a move up. We saw the same thing here a while ago, 3 bearish candles, little spike low, and then a move up. And here we've had 3 bearish candles. I expect we might see something like this, sort of a break, a false break beneath the support level, like we saw there, and like we saw there, after the 3 candle move down, and then a spike back up again. So I'm looking for a spike. Hopefully we don't get triggered into our short position, the short hedge. So I might move this down a wee bit, down to maybe 258. I think I'm going to do that, just to avoid that spike low. Sorry if there's a bit of noise here. I'm just really doing this off the cuff. We're still in the Hobbit house. We've actually got a flat. I'm going to update you with that news soon. A beachfront flat that we're moving into shortly. Not this weekend, but next weekend. And it's literally it's literally on the beach. I'll show you some footage of that a little bit later on. So we'll be out of this Hobbit house, which is a bit tricky at the moment because I've got my little office set up here and people moving around and animals as well. Dogs, Peanut and Jinx. Peanut the dog. Jinx the cat. So perhaps a little spike down, very similar to that there. Just have a look at what these formed, and I did put a little picture up on Twitter actually about it. Let's see if I can find it. Yeah, so here it is. This is the sort of thing. So I've just circled them. I've taken them off my live charts, but I circled there. There you can see the 3 candle move down, forming a flat bottom, a spike down, breaking below, stopping out a few traders, then moving up. Same thing here, 3 candle move down, spike low, stopping out a few long positions, perhaps clearing out a bit, and then the move up. And now we've had this 3 candle move down. This is my overall sort of plan, we're in a long position now. This green line is that sort of path which we've seen twice now already before. Spike down and then a move up to a new high. Each of these eventually formed a new, well, this one hasn't, but we did get a new high after that one. This one hasn't. That's a little bit worrying because we've got lower lows consequently subsequent to that pattern. But let's see if it works out. So move down. My short hedge order is at 259. I might move that to 258 just to avoid getting stopped out by these spikes. And then if we do get triggered into the short hedge, we'll be looking for a move down to around about 240 to 250 into this pink zone here, where I'll either take off the short hedge for a profit or I'll add another long position on. So that's the idea. So I can take the short off and leave myself fully long, or I could add another long, which would leave me 2 longs and 1 short, all equal size. I think it's a decent plan. So that's where we are at the moment, just looking for that little spike down, similar to that. These back to the live charts here. If you look at the NYMEX day chart, similar sort of picture. This is what we're looking at. So there's our support level that we're falling into now. The spike down should stay within the support, within this yellow zone, but a break or a spike below that would hit my trigger for a short hedge and then take us down into the next yellow zone, which is between 240 and 250. That's the kind of thinking on that. So on both charts it looks good for that strategy. Got no problem with that. WTI, we're long on this. I did put a tweet up on this late last night. We've broken above this little sort of downward trend line and above these 2 moving averages, and yesterday we closed above all of that nonsense. And for the first time since the 1st of May, roughly, this is the first time we've actually closed above the 50 SMA. We've also broken above this very short-term downward trend line, and all looks good for WTI. We're long on that. I don't have the Brent crude chart on here because I'm now watching soybeans and sugar for a short. Looking for sugar to get right back up in here somewhere. I'm not sure if these rallies on soya and sugar and perhaps a couple of other edible commodities or agricultural commodities because of the drought, not the drought, the heat wave that we're seeing in large swathes of North America. I haven't been following these too much. I'll do some research on these today. But if we can get right back up here into 1520 and above on soya, that'll look interesting again. And if we could get back into this zone here, that one there, that would be the best place to sell soya again. That would be around 1,600. And for sugar, if we could get back up to 25 cents per pound, that would be great. Who knows, we might. Or we might even have a little go at 24 cents per pound. So 24 to 25 on sugar. I like that. If you're interested in cocoa, I'm not going to do a video on cocoa, but I have put a tweet up on it. This is the cocoa tweet I put up. Pretty much what you want in a commodities chart. Short at 3,400. That's where we are at the moment, at that line, at that resistance line. Very long-term resistance line, 3.4. I think we could get up a little higher. I'm allowing for a move up to 4,000, as far up as that. But this level here is super key, 3,400. I'm going to allow for a move up to this level here, which is 3,800, and for even a spike above that to 4,000. So first short position here, then 3.8, then 4,000. I think that looks really good. Look at the RSI on this, massively overbought. In fact, the highest it's been on the RSI since 2018. And before 2018, it was 2011. Before that was 2008. In 15, 16 years, there have only been 3 times when the RSI has reached this level. And you can see it on the price chart. I mean, you don't need the RSI. There's the first occasion, second occasion, third occasion. So we're right back there now. That's what you want on a commodities chart. So looking at gold and silver, we're long on both gold and silver and uranium. Don't want to talk too much about this here, but let's quickly look at the charts. There's the silver chart. You can see it's very, very simple. We've got an upward trend line, which we could get down to. We've got the Fibonacci levels, and we've got a couple of support lines drawn in here. We bounced off this gray line, which is the long-term support and resistance line, exactly where we bounced. Goes back a very long way, a very significant level. If it's going to bounce, this is a good place. But we've got this whole yellow zone beneath us, so anywhere in that yellow zone, and if we scoot across to back where we are right now, that yellow zone meets this trend line. So I'm allowing for a move down to $21.50, somewhere around there. We're at $23.20 now, and we started buying at around $22.30, $22.50. We could move back down to this trend line. That would be the perfect place to buy. That's halfway between the 50 and the 61.8% Fibonacci's. And you can see we just didn't quite reach the 50% fib. That's the bottom of this kind of support zone here. This, I don't know, peach colored support zone. So in any case, we're long on this now, but prepared to add to a little bit low down, around about 21.50 to 22 in this region here on silver. That's looking good. I like the acceleration upwards, this sort of curve upwards. And we'll have to see how that goes. But I'm happy with that one. It's the neatest chart actually I've got on my entire setup. Actually, all the metals look really neat. Gold, same sort of thing. Beautiful, neat chart. Cleared out some long hands here. No one really thought it was going to retrace beyond this channel bottom after making the third attempt at this high at 2,075, 2,000. We only got to 2,067. It's close enough. Previous high was at 275 or 270. Well, this one was 275, 270 a little bit lower, 267 a little bit lower. So yeah, some people are calling for a triple top here. Other people are saying gold's going to 2,500, 3,000, 3,500, 4,000. I tend to believe that the bullish side is on for gold, but remember, gold and the dollar are not good buddies. In fact, they're equal and opposite almost. So if the dollar picks up steam and rallies, and if interest rates carry on going up, it's going to put pressure on gold. We could see gold drop back further into 1840, 1880, 1850, 45, possibly even 1800, 1820. But for now, it looks okay. Today was a bit of a concern. We had a bearish engulfing candle, rejecting off this resistance level above us. But we're going to spend some time here. I think it's going to take a little bit of work to get up through there. It's a key level. This green line in the middle particularly, we didn't quite reach it, but we got close. This green line's a pretty strong, solid line, and it's this whole green zone, which is a resistance level, and an important one. You can see over here it's very important. Over there it's very important at the channel top there. And over the last few weeks we've been trying to hold above there and eventually fell back down through. This is a classic breakdown, retest from underneath. So unless we can push up through here, this whole green zone, up to the bottom of this channel line and then through back into the channel, gold's in a little bit of peril. So I'm not betting every penny on this move. It's part of my portfolio of trades, but I think so far it looks okay. I'm encouraged by the fact that silver is kind of leading the way. Often it's gold that leads the way, and this time it's silver that's leading the way, and having broken above that resistance level and held above it, that red line there. So I think that's pretty good. But, you know, it's like any other trade. Until it actually works, it hasn't worked. So let's see how we go. This is uranium. I said all the metal charts are good. I like them. Uranium's classic. We broke up through this downward descending triangle trend line. If this was going to be weak, it would have been rejected again at this downward trend line. It's a descending triangle. Descending triangles normally resolve to the south side. On this occasion, we've broken up through it. We've fallen back to the top of that line. It's classic breakout, retest, and holding above this pink level here, this pink zone. It's a good support level, and we're long on URA, looking for a move back up into, I don't know, 24, somewhere around about 23.80, 24, and then eventually up here. There are nuclear power plants being built all over the world right now, in Europe, in the East. I don't know what the policy in the States is, but that's a good enough start, and there's not enough supply of uranium to meet these demands. It's going to take a little bit of time to develop because these plants are going to be built. Out of interest, biggest suppliers of uranium in the world, the biggest, I can't remember all the others, but check it out on ChatGPT. Actually, let's have a look. It's really interesting. All right, so here are the biggest uranium producers in the world. Number one, Kazakhstan. It's kind of funny. I almost think that Borat actually sang about uranium. Or was it potassium? But potassium and uranium go together. Potassium is also metal. I think they live together in the ground in very close proximity. Kazakhstan's the leading producer of uranium in the world since 2009. Then Canada, then Australia, Namibia, just up the road from where I am. And I believe in the area that I live in, the Eastern Cape, there are enormous uranium deposits. And then Uzbekistan. So Uzbekistan and Kazakhstan have come into this business quite recently. And then there are other places like Russia, China, United States, Niger, Brazil, etc. The only other thing I want to look at quickly is S&P, NASDAQ and S&P. Once again, if you're not following me on Twitter, it's a good idea to do so because I put up a lot of tweets there every day. We're looking for a top on NASDAQ. We're already short NASDAQ. Looking to short S&P. We might get the chance to do that today. We've got the jobs report. We've got JOLTS report today. We've got non-farm payrolls tomorrow. We've also got the unemployment numbers coming out of the US today. All those numbers are going to be super important. AMD, you can see the pattern that I'm looking for there, just coming off a bit. S&P coming off that top there. Potentially a double top. It did go slightly higher, but potentially double top. That's the area that I want to sell into, really, ideally, that gray zone. A lot of this I put on the previous videos, so you can have a look at my last trade update video. I'll put a link to that at the end. Yesterday we saw a hanging man candle. Last time we saw this pattern, and I tweeted about this as well, last time we saw a hanging man on the S&P with this sort of pattern preceding it was just prior to the 2020 crash in the stock market, after that candle pattern, I'll show you, after that candle pattern, the market dropped 35.7%. Let's have a look. 2020, there we go. That's the same chart, same pattern. We got this dip down. You can see we'll go back to what it looks like today. Dip down, move up, edging up, hanging man candle pattern, and then 1, 2, 3, another hanging man candle pattern, 4, 5 days, another hanging man, but with a bigger body, and then bang, a massive collapse. That pattern there is exactly what we see developing right now on S&P. So doesn't mean it's going to collapse from here, not at all. I think we might just edge a little higher, maybe form a series of new hanging man candles like we saw in 2020. But this, we saw the move up, little dip down, move up, hanging man. We had a star candle the day before yesterday. Okay, it was Independence Day. Hanging man, move down. Might get a little edge higher, a couple more hanging man candle patterns up into this area here. With a bit of luck, we can touch this green line at 44.70 or 80, and then a move down. Last time we saw those candle patterns was in 2020. Not since then have we seen this shape. Just another interesting coincidence. Apple, I've tweeted about Apple. Apple, their main producer, assembler, has been way down on production and business recently in the second quarter of 2023. So there's a little bit of trouble brewing in the Apple camp, not turning over iPhones down quite significantly. Let's have a look at the numbers on that. Yeah, so here's the article. Taiwan's Foxconn, a major iPhone assembler for Apple, said that second quarter revenue dropped by 13.8% year on year. Second quarter revenue, 13.8% year on year. But the outlook for a third quarter was brighter ahead of peak shopping season at the end of the year. They need to talk this up a bit because 13% is a hell of a drop on iPhone assembly, a major assembler for Apple. Interesting news on that. So we're watching Apple and NVIDIA, AMD, Microsoft, all of these stocks, and the broad indices to come off. So we're already short NASDAQ, and I'm short a couple of these names already as well, including Apple. Here's an interesting chart in NVIDIA, and what we've got here is this gap, previous all-time high here, this level in the middle of this gap. We scoot back to where it was there, dead center in the middle of the gap. Normally gaps fill entirely, so if we do fill this gap on NVIDIA, it's not going to stop at the previous all-time high, probably. Normally, once a gap starts filling, it fills completely. So that would take us down to about $310 if we did get a gap fill. What we're forming here is a little sort of head and shoulders potentially, and a clear trend line. A break and hold beneath this trend line and the 20-period moving average, which is there, should see us retest the top of this gap. Last time we retested it, we failed and moved higher. If we retest it again, actually it's been two occasions already. Move up, test, bounce. Move up, test, bounce. This would be the third occasion that we retest the top. If we break down through this trend line, head back down to the top of the gap at 375, it probably won't hold because we will have broken down beneath the 20-period moving average and this trend line. And third time's not a charm when it comes to retests on trading. Third time's normally the failure, unless it's a triple top, which are rare. And then we'll head down towards the previous all-time high at 345 or so, 346, 347, and then down to the bottom here, probably at 320, 318, 320. So that's what we're looking at on NVIDIA. Apple short already. Well, some bad news coming out of it. It's one of its big assemblers and just a really overdone chart overall. It's too neat, too far, too long. We're too far above all of these moving averages, and I haven't got those moving averages on there. Let's just put them on there. Add these indicators to the entire layout. So there are the moving averages on Apple. There's the 20, 50, 100, 200. Look how far from the 200-period moving averages we are at the moment. We're at 191 now. Moving average is at 155. Even the 50 is miles away at 177. So that's why we short Apple. A couple of reasons. Overall, the macro picture, but also Apple specifically because of the shape of the chart and because of some of that news that we've just seen. So that's NVIDIA, Apple, and some of the indices. AMD will follow NVIDIA. Already looking weak. We've got this repeat pattern here. 3 white soldiers, bearish engulfing candle, piercing pattern. Here we've got 3 white soldiers, piercing pattern, bearish engulfing candle. Exactly the same pattern as repeated here that we saw middle of June. Identical, except for the fact that today's candle that's this one today, this piercing pattern hasn't formed, hasn't completed yet. Today is still going. We've got the JOLTS number and unemployment coming out later. If we see something like that, it'll be an almost textbook replica of what we saw on this period there. And I did point this out days and days ago before we got to today and yesterday when we were down here somewhere. I said, watch out for this. It's a move up to the 20-period moving average, the top of the gap. That's what was required to fill the gap, bounce off the bottom of the gap, fill the gap from the bottom, get to the top of the gap, the 20-period moving average, repeat this pattern, and then move down. Let's see if it works out. So that's AMD. I think that looks really, really good. And that's all I got to say. And then finally on the yen pairs, we've finally broken structure on all the yen pairs. I'm not going to open these all up. You can see we've broken down through support levels. We've broken down through rising trend lines on all of these. So we've got US dollar yen, euro yen, pound yen, Aussie yen, Swiss yen, CAD yen, All of them breaking structure, breaking support. These are 4-hour charts. We're short across the board here, looking for major moves down. And I think the yen trades are the highest probability trades. I think we're going to see some significant strength coming into the yen over the course of the rest of this year, aiming for around about 130 yen to the US dollar, possibly even below that, down to 125, 124, 125, 128 maybe, something like that. So we're just getting started now, and these are starting off beautifully. When it comes to the majors, I have no idea. I've repeated this video after video after video. Have a look at my previous video where I've said this. I'll put the last 2 videos up at the end. And that's it for today, folks. If you haven't subscribed to this channel, why not join? It helps the channel, and it'll help you if you enjoy this sort of thing. And whilst you're here, please give the video a thumbs up. Take care.